We assume for the rest of the year that there will be a mild recession in Germany, something around minus 0.3% related to the GDP. And that means that we stay prepared. However, I would say we will stay well below the 900 million euros of risk results, which we have indicated at the beginning of the year. NPE ratio is at 1.1%. Cost of risk in the first quarter, 10 basis points. So you see, it's a very resilient loan book. And I mean, the question on the loan growth very much is dependent on the clients, as we all know. In the moment, we assume basically a continuation of the demand. So we assume at least stable loan books. But clearly that depends on the investment appetite of our corporate clients.
Bettina, solid, things moving in the right direction. I've just got this eternal question for you and a lot of other C-suite bankers. Why doesn't the market really believe in the story? If they did, we'd be trading nearer to 1 on our price to book across Europe. And it's not just Commerzbank, I want to point out, but your personal bank trades at 4.43. Why does the market still not believe in the value of your asset book?
Well, I mean, that's a question on capital market assessment. First of all, I think we just work on further improving our profitability, because there's a strong correlation between price to book and profitability, and we make progress. I mean, we had a great ROTE for the first quarter, 8.3%. That will be unfortunately not probably the number for the full year, but we will see again an increase in profitability for this year. And I'm convinced that by just continuing this trend, we will also see an increase of our share price, definitely, hopefully already today.
Bettina, just to follow on from Jeff's questions as well, we've seen a residential property market problem in Scandinavia, specifically Sweden as well. Germany has some very interesting real estate dynamics as well, both on the housing market and indeed on the CRE side as well. Do you see anything in those areas that should alarm investors and should alarm authorities and indeed alarm yourself?
Well, I mean, if you take the private mortgage market, Germany is a specific animal, a very safe animal, I would say, given that we are on a fixed rate environment. That helps. Number one. Number two, we come out of a long period now of very low interest rates. So there has been also a lot of repayment. So the loan to value relation is pretty good. I mean, we now see some price decreases, specifically for existing buildings. The new building price market still holds up pretty stable. But we are not, I mean, we are not really worried about it, given that we have been very, very conservative in our policy there. And the commercial real estate market is clearly also, it's a difficult market, and also in Germany, given also the trend to home office and stuff like that. But also here, as Commerzbank, we are relaxed on it, given that we didn't do any business with commercial real estate developers, etc. We have a commercial real estate exposure, but that's 80% is more than 80% is investment grade, very much linked to our corporate clients and specifically also on the to our wealth management clients who do that for investment purposes. So all in all, we are not worried. I think the only thing what we see, and we see it also in our numbers, is that the activity and the demand specifically on mortgages is lower, and therefore we will expect a slight decline of our mortgage book in the course of the year.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.